What is PAYE? It's pay as you earn, and it's effectively how the employees of your company get paid and how you pay over the tax and national insurance contributions which are due to the government on their behalf. If you employ staff, you will need to register with HMRC, that's Her Majesty's Revenue and Customs, and operate a payroll. So, each month or week, or even for weekly, whatever the period for which you pay your staff, your payroll coordinator, who incidentally could be a bookkeeper, an accountant, or somebody in your company, whoever, is going to produce that payroll for you, will need to take those records of your staff, including details like what hours these staff had worked, and work out from their annual salary, hourly, weekly, what to pay them. Now, they will also need to know any benefits or perks of the job, any overtime or bonuses or wage increases that were due in that period, any expenses that need to be paid over that they've incurred out of their own pockets, any pension contributions either from auto-enrolment or contributions into a private pension, any deductions or attachments to earnings from child support through the CSA, the Child Support Agency, or council tax maybe to the local councils, and any student loan repayments that need to be made. Any deductions or clawbacks of income tax for benefits like company cars. So they'll need all of that information. Then they'll need information on the staff themselves. For example, they'll need their full names and addresses, of course, their national insurance numbers, dates of birth. They'll need to know what type of an employee, staff member they are, whether they're a director of the company or a shareholder. If they're a sole trader or a partnership, then you don't tend to pay via the pay-as-you-go regime. Each pay period, dependent on how your staff are paid, your payroll person will then take this basic information of income and deductions and usually run this through software to produce the individual pay slips for each staff member, which then obviously get distributed to the staff. These pay slips will show the gross pay or income that they've earned, and then all the deductions underneath, including the national insurance contributions and tax, and then arrive at the net pay to be paid directly into your staff's bank account. On top of that, then usually once a month, usually between the 5th and the 19th of the following month, your payroll person, as I've said, whether it's somebody that you employ or your accountant, whoever it is that does that for you, will then submit these records, or returns as we call them, to HMRC, so that the correct amount of national insurance contributions and tax are recorded against the individual's tax records and the company. Because of course if you're employing staff, you have to pay employers' national insurance contributions. You'll then actually pay the money across. Now, there'll also be a need in most cases these days, if you employ staff and they meet the qualifying criteria, to allow for an extra deduction submission, which is that of auto-enrolment, or more commonly known as auto-enrolment pensions. You'll have to submit this information to the pension provider, whoever you choose. That could be Nest, it could be Standard Life, Now, there's a whole host, and pay over the actual amounts, usually by the 20th of the month.